Hello everyone, I'd like to recap the ES trading today for June 1st, 2018. I have Apex Trader. I have my daily chart pulled up to start with. Again, my name is Troy, and I've been trading the ES Mini futures contract. I trade the ES futures using three indicators. I have the Bollinger Band with a 10 simple moving average in the background with my candles. I overlay the Fibonacci retracements on my chart, and I keep them up on the daily charts to get a picture of a long-term trend. And then I use the stochastic indicator to gauge the momentum. So I like to keep the daily Fibonacci retracement up all the time. It doesn't matter what time frame I'm on, I like to keep that up because that seems to hold key levels of support and resistance throughout the trading session. And as you can see, I have a long play drawn on the daily. The reason I drew a long play on the daily, back on May 14th area, the ES futures created a higher high excuse me, off of a little pullback here. And so this was a high for the ES futures. The high was higher than the high back from April 18th. So I made the choice to draw a long play. My low has been the same, roughly, all the way across, except for back here in March, I created a higher low. So my overall gauge of the ES futures contract is a long play. So I start here. Let me delete this. And I draw my fib level from, I'm going to encompass the body of these candles. The reason I'm taking the body of this low candle here and not the tail is that the price actually pulled itself back up to this level. It was down here at one point in the day, and the bulls took over from the bears and pulled the price back up. But if I take this level, it encompasses key support or resistance level. In all of these cases, it seems to hold key support because the price actually closes above this level all the way across. If you were to draw it, and right here would be considered a key resistance level because the price actually closed below this line. So I'm going to take my fib retracement, and I'm going to pull it from the bottom and go up to the top of the bodies here. The reason I'm using the bodies on this area here is the same way. The bodies seem to close and hold key resistance levels all the way across here. So what I'm looking for now in the overall big picture, and we don't know how long these plays take to play out. They could play out on the dailies in a couple days. They could take a couple weeks or a couple months to play out. I'm looking for the price to retrace back around this 50% level. And as you can see, it took about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days for that to play out. The candle on May 29th retraced down to the 50% level, which is the green line here, 26.78. The price did pull back and it closed the session up around the 38.2 level, but we did hit this key retracement level. And as you can see, what I'm doing with my stochastic indicator here is I can draw a little trend line to show you that that didn't want to work for me. I can draw a trend line here and show you that my momentum is pointing down. So my price is dipping down a little bit, but yet it's trying to rise up and staying relatively flat, trading between the 0 and 23.6 level on a daily basis. So as my price is either trying to go up or staying the same, my momentum for the overall time frame is slowly dying off. It's still high because we're above the 80% level on the stochastic. So it's still considered in a nice bullish trend. Anything above 80 is considered bullish. What I'm looking for is a break below this 80. And as you can see, we start breaking below the 80 on the May 28th, and on the May 29th, overall on the daily, this red candle, here we go, we broke down to the 50%. And so what we're looking for now is we can either take a short play up in here throughout the day if you can catch the session soon enough, or we're looking to actually take a long play off of the 50% level down here at the bottom because it did retrace itself. On the overall daily, the momentum is still pointing to the downside, so it makes it really hard to actually take that long play when you see the momentum going down on the daily. As you can see over the course of 3 days now, which this green candle ended up our session today on June 1st, it did turn and pull back to the upside. So what I'm going to look for is this going to break my trend line here? Am I going to break my trend line back above the 80 and hang out above the 80 in the future, or am I going to hit my trend line here for the momentum and turn and start coming back down? So this is just an overall big picture. So what my price targets are, and everybody trades a little differently, is I would look for the ES overall to retrace back up to this negative 23.6 area. And if I zoom out a little bit, you can see I also have the negative 61.8 indicator drawn up here, which is 27.95, 39. So we could say 25 or 50 because it trades in quarter ticks. And if we're looking at that level, if we go backwards a little ways, you can see that this level holds pretty key resistance lines. It's going to be resistance because our price is below this level from these previous highs back in March and February. So now I like to trade off of the 15-minute chart and the 5-minute chart. You can scalp the ES futures contracts off of the tick charts. I have traded the tick charts before, and you can make some really nice trades off the tick charts. I've traded the 1-minute charts, 2-minute charts, 5-minute charts. Traded the 1,000 and 3,000 tick charts. So each different time frame does give you different opportunities to make and place trades. What I have found out is that you should not search for your trades. If your trades aren't there, stay out of the market. Don't take the trades. This is the charting from today, June 1st, off the 15-minute chart. And today overall is a very nice up day. You can see that with stochastic, with our momentum indicator, it's hovering that 80 line. If I drew a trend line straight across, which you can see with my crosshairs, that it's staying relatively at the same peak, and my lows are staying relatively at my same lows for pretty near the majority of the day. I started off before I went to bed the previous night before last night, taking a look at, this would be overnight. Zooming out here, looking at what the overall trend is going to look like. What do we got going on here? So if I'm looking at my time frame here, this was towards the close of the day. This was the close of the day yesterday on Thursday. May 31st. And I can see that as it opened up in the evening, May 31st, my price continued to rise over the 15-minute chart until the 9:30 area. And as my price rose, I can see here off my Stochastic that my momentum continued to climb also. And once my momentum turned, my price continued to go up. So with momentum, it's kind of like a jet airplane taking off. You're standing still at the runway, and your momentum is going to start picking up. So as you can see here, at this point, my price is continuing to fall. My momentum does come down a little bit, but it picks up. And so as I'm basically sitting here at a standstill, just like an airplane, my momentum starts to take off and it gets higher. Well, my price is kind of going flat. So now we're going to start to see the airplane taking off as my momentum builds and builds and builds. And then we have liftoff. So we're flying in the air. It's time to land and or start making our descent. So my momentum now is going to start curling to the downside, but yet my price is still going to the upside. And I can see that, show that by drawing this quick in here. What do I got going on here? Drawing a quick flat trend line in here from here to here. My momentum or my price is going up, and if I were to take and draw my trend line here, my momentum is starting to go down. So we have a divergence happening right here. Let's get this one out of here because that play is over. And at some point now, my price is going to fall below the 80 level. And I'm going to delete these out of here. And when my price does fall below the 80 level, that gives me an opportunity to draw a Fibonacci retracement. I take from this low area here and I draw my retracement to the high area here. And I see my momentum is finally dying off. So around the 945 area, I feel comfortable taking a short play. And I would take the short play somewhere on this red candle. And if you don't get it on the red candle here, because you really don't see your momentum turning yet, you can get in on the next candle. So you lose a little bit on the top, and essentially you lose a little bit on the bottom, but you can feel confident that you're going to make a nice positive trade by taking the cream right out of the middle. So I take a short play somewhere around the 23.6 area, and I can confirm that with a different time frame. If I want to switch to a different time frame, I like to go to the 5-minute time frame. The earlier time frames show you things happening sooner. And so as we're looking to take this short play right in this area here, now we're on the 5-minute time frame, I can confirm that my momentum is dropping on the 5-minute time frame. Prior to getting into the 23.6 area, as far as the fib levels go, that my price is coming down. I crossed my midline of my Bollinger Band, which is a very, very important aspect also. A lot of times, as you see back here, it likes to trade the outside of the band, pull back to the midline of the band, trade the outside of the band, back to the midline, outside. Well, when we get across over the midline, then I feel comfortable saying that there's a direction change. And you can see that when you're merging stochastic with your Bollinger, with your fib levels. And so then I go back and make my trade off the 15-minute chart for that same time frame. And if you watch what happens right here, the price drops and drops and drops, and it hangs right at the golden. It hits that golden fib level, the 61.8, which is around the 2707 75 area. So at this point, you can exit the trade and feel comfortable that you have made you hit your price target. It retraced back. You see that it pulled down below the 61.8, and now it's pulling back up to this and closing that 15-minute session above the 61.8 level, and we're opening the next session as basically a doji, right, to the next side of it, the next 15-minute session here, and my momentum starts to curl back to the upside. So I personally would set my exit at the 61.8, so it would have closed me out at this candle session. If it continues to go lower, then I'm out. I'm out of the trade, but I took a nice profit off there because you can never really gauge the top or the bottom of where things are going. If I entered the trade around this candle here at 27.10, I get out of the trade at 27.07, 75, I'm taking almost 3 points. And every point movement for one contract is $50. So this would be on one contract, this would be $150 short move. And you're looking at 1, 2, 3, 4 candles in 1 hour. I'll take $150 an hour off of one contract. So 2 contracts, I like to trade 2 contracts. So that would be a $300 move in an hour. And then I'm out of the trade. So where I can enter again for the long play is I see my momentum's rising again. And so we're looking for a retracement back now. So we hit the 50%, we hit the 61, and we bounced off of it. Now I'm looking for a price target of the negative 23.6, or if it blows past the negative 23.6, I'm looking for a price target at the negative 61.8. So somewhere in these candles here, you can see that the stochastic, my momentum's increasing. And as I'm approaching my 50, my midline, you probably would take a long trade right here as I break my midline and start going up. But there again, so this would be 1 a.m. level. I can go ahead and go to the 5-minute chart. And I can go to my 1 a.m. level off of the 5-minute chart, and I can see I've broke my 50% midline on the stochastic. So typically above 50%, I'm looking to be bullish and go long. It hit my 80 and it started curling. So if you're comfortable taking a long trade off the 61.8 retracement level, then you can pick the trade up because we have a confirmation here that we're bullish. Our momentum is increasing. We're creating higher lows as momentum moves to the upside. My price is kind of staying flat, and so pretty soon we're going to have the lift off because our momentum is rising before our price does. So momentum precedes price always, whether it's going up or going down. And so as we see, price takes off. It tries to take off. And you can see here with my momentum, it does try and take off again. So now I'm on the 5-minute chart. But now if I go and take this trade off the 15-minute chart, which I like to make my trades off the 15-minute chart. If I go make my trades off the 15-minute chart, that would alleviate me from taking a trade possibly too early and maybe continuing to go back to the downside. By taking my trade off the 15-minute chart, I would enter my trade somewhere as we cross the 50% on my stochastic to the upside. which could be anywhere in this green candle here, would be where I would be comfortable taking this trade to go long with. So say I set my levels up to take the trade at my 38.2 Fibonacci, so 2709.50. I would take my trade right here because my momentum is still going to the upside. I confirmed it on the 5-minute chart, and I take a look. My price target's going to be either my 23.6 or my negative 61.8 on my fib levels. So if I enter the trade right here at 27.09 and I go long with it, excuse me, it hits all of my fib levels. It retraces back to 0%. It blows right past my 23.6, and it actually hits my 61.8 retracement at 27.17. So within 1, 2, 3, 4 candles, within 1 hour from 1 a.m. to 2 a.m., Asian markets open around 1 a.m. American time. And so from 1 a.m. to 2 a.m., I have just taken almost 10 points. I've taken an 8-point trade. So an 8-point trade on one contract is going to give you a $400 play. That's an $800 play on a 2-contract trade. I'll take $800 for that hour also. I'm not going to sneeze at that. Well, then we go ahead and see that this next 15-minute candle actually pulls back. It's a nice big red candle, and I see my momentum is curling. So by setting my price points to get out at one of these fib levels, I stay conservative. I make a positive trade. I can make more positive trades by trading this way than by not. So this play is done. I would actually go ahead and I would remove this fib drawing, because this red candle actually constitutes a down play. My session opened higher. Well, it didn't really open higher. Well, yeah, my price closed here, so my session did open higher here, but I ended up closing my session a lot lower. And so you could essentially redraw your Fibonacci numbers from this low right in here. You can go from this low right up to your high here. And if you take a look, this red candle in its 15-minute session retraces itself right back to the 50% level. So this candle alone is a pullback from this quick run up. This single 15-minute candle with momentum being down will constitute your pullback. So where do you take the long play? Because this would be your short play, but it's too fast to get in. So right now you're watching your price hover at the 38.2 to 23.6, 38, and you're pulling off your Bollinger Band. So I would feel comfortable seeing right here these candles. It's a little hard to see with the fib numbers and my crosshairs in there, but that level seems to rally off the midline of the Bollinger Band at the same point where my momentum decides to curl to the upside. So right in here on this candle, I would take a long play. And my price target is either the negative 23.6 or the negative 61.8. I like the price targets to be the negative 61.8. Fibonacci golden number is 61.8, positive or negative. And so as the session plays on, my momentum is staying to the upside off the 15-minute chart. So these are longer plays than in and out in a minute. These plays, I like the 15-minute chart because you can see the directionality and you can see the trades play out. So as my momentum stays high, I'm above 50, and I'm trading between 50 and 85 area with my momentum. That is bullish. I can see that my price is following the midline of my Bollinger Band. And it's following the midline of my Bollinger Band. This red candle kind of might shake some people out, but it does hit your 23.6 price target back here. So you may not even be in the trade anymore. You could have gotten out of the trade possibly on this candle at 4:30 a.m. because it did rally off. If your order gets filled, you could get out here and be out of the trade. If you don't get out there, you would end up possibly getting out here, or you could get out here, but your momentum is still up. So if you're a conservative trader, you could set your levels at the 23.6, or you can set it somewhere between your 23.6 and your 61.8 to get filled a little early. I like to shoot for the 61.8, and it does. The price does end up at the negative 61.8 retracement off of this 4-candle run up. This quick little 4-candle run up with its pullback, with its retracement. You end up taking a long trade, and you end up positive. Again, you take another positive trade. One contract. If you were conservative, you got out at 27.19. You took the trade somewhere around in here at 27.14, 27.14.50. You end up taking 5 points out of that trade. This trade did take a little longer to play out, over a couple hours, but you still capitalized on a nice long trade. Or if you ended up getting filled here at the negative 23.6, really you only took 30 minutes for this trade to play out. So you could have possibly taken 5 points within 30 minutes, depending on if your order got filled at this level or not. If not, then it's going to take a little longer. You'd end up a couple more hours, but your order would possibly get filled here or here. So you would exit the trade positive another 5 points. One contract, $200. So at that point, I would personally stay out of the market, because now to me, even though momentum is high, I would consider this to be chasing. If you want to go searching for trades at your lower time frames, you can go search for trades, but you're more often than not going to lose if you start searching for trades. You could get lucky and scalp a few here and there, but I would say to stay out until you have another positive indicator to get in the trade. I'm going to delete my Fibonacci retracement here, and look at this kind of key level here. So this would be this red candle here would be a low, a retracement down, which is going to be higher than some of these other red candles down. And then we're still continuing to go up. So it looks like on this green candle here, we actually hit a new high, but there is a nice pullback, and then we start going red and we actually pull back down. So what you can do here is you could use this situation. This is a really tough one to see because you end up with a spinning top. You end up with a really low session, and you end up with a really high session up here. So the price did come way up here, and the price did come way down here in that 15 minutes. It was very erratic. But if you would like to draw the long play, you can draw the long play from that point, because you end up with a new high here, but you have a pullback here. So this would be considered a new high. You could draw from this level here at the low. You take the bodies here and you draw it right up to the tail, because you created a new high. Most of the time you can draw them from the bodies, but this one was such a really strange candle. I found it better and easier to draw it to the end of the tail. And then if you take a look, this next red candle gives you your 50% retracement again. And when you combine that with your momentum still being high to the upside, you have a little pullback to your off of your outer band, trying to go towards the middle of your band, but it doesn't quite get there. You could end up taking a long play again and feel confident that your long play is going to play out. You might not take it here on this candle because momentum is showing down, but you could enter right here off of this candle about the 10:30, 10:15 area as your momentum rises. And so as your momentum rises, you can take the trade to go long somewhere around the 27:30 area, knowing that your price retrace down here to the 50%. If you're an aggressive trader, you could automatically set this to buy right here, which would give you a 5-point run up right here. But you don't know if this is going to be the low. Your momentum is pointing down, so it could continue to go down. You just don't know that. So you would be truly speculating here at this point. I like to trade with full confirmation. So I would take the trade. I would eat these 4 or 5 points down in here, and I would take a long trade right as my momentum starts rising back above my 80 level. And I would end up with the trade probably around 27.30. Again, my price target, my first one is the negative 23.6 area. And as we proceed on through the day, you can see that this candle here just about hits my price target. So if you set it at the negative 23.6 directly, you would not have gotten filled to get out of the trade. If you were watching this play out, you could exit the trade right here if you didn't have your order set up with confidence that you would get out at 27.35. So you just took a confirmed 5-point run up from this level to this level, and that created another new high here. But it looks like our trend is changing directions, and so as our momentum drops, our trend starts going to the downside, we would possibly look at redrawing these fib levels. So I'm going to delete that fib level, and I'm going to go ahead and redraw another retracement. So I know that this is my peak right in here. I've got 3 confirmed bodies right at this high, and now we've broken down to below my midline. We've broken past the midline. Our momentum is down. Where do I draw my bottom? I would look at pulling the bottom back to the tail right here off of this candle. This candle was a really weird candle today with the really long tails on it, but I would constitute this as a low right here, and it lines up with these lows right in here. So we can draw the retracement to actually go long still, because you created a higher high again than this point. And now we're just looking for a retracement back to our 50% level. And as you can see, it rallied here, but our momentum is still dropping. The momentum is still dropping and going down, down, down. So right here, these 2 candles actually pull you right to the 50% level at the 27, 28, 50 area. So you could end up taking a long play off of this area, but you probably don't want to take the long play directly off of that area, because as you see, momentum is still pretty wide here. Your stochastics are wide and going to the downside. So at this point, because this is the end of the day, I would stay out of the trade since it's a Friday, and look at re-entering on either Sunday if you're after hours trader, or re-entering Monday morning. That is how I trade the ES throughout the day. As you can see, my net liquidity, I am up to 57,975. I am making more positive trades than I am negative trades. And so this week I was able to gross $7,975 in my account from Tuesday, because we had a short week with Memorial Day, to Friday today. So I was up almost $8,000 this week alone. Please leave your any questions or comments, and I will try and answer them the best that I can. I've been trading the ES now for a couple of years. I've been trading stocks for a couple of years pretty heavily. I've traded with many different brokerages and trading softwares, and currently I'm switching over to Apex Futures, and I'll be trading, showing all of my trades with my live account through Apex Futures. Please go ahead and if you like what you're seeing, follow my videos. I'm going to try and post a couple videos a week to get started. I'm kind of new to this. I'm learning how to get the live trading and live videos out there. So this was just a recap of today. I didn't have time to actually video while I was trading today. I made a couple trades today. Ended up positive for the day again. So this is we're looking at 4 days this week that I closed with green days. Thanks again.